Hi there, welcome to Kneppy Invest. In today's financial year 22 results video, I'm going to be looking at a company called IMDEX, a company I know nothing about. In fact, I thought this company was a mining services company, and I'm not sure why I thought that because I can't remember looking at this company in the past. Maybe it was because of some podcast I listened to or some show I watched on TV, and I wasn't that wrong. In fact, I would define IMDEX as a mining technology company. Now, just because it is mining technology, not mining services, doesn't mean I think of this company any differently than mining services company. And in fact, I don't consider this company much different from mining companies. And in my opinion, the majority, if not every single mining company, is a low quality company simply because they are price takers. And possibly it does seem like IMDEX is heavily weighted towards the iron ore sector, just based off the share price action of this company over the past 10 years. Now, I could be mistaken, um, heaps mistaken. So if I am mistaken, and if you do know a little bit more about IMDEX than I do, leave your thoughts in the comment section of this video, because that's how I learn. People bringing up my mistakes and telling me that I am absolutely wrong. I could be wrong about IMDEX in that regards. But IMDEX is a global mining technology company. Their product offering includes an integrated range of drilling optimization products, cloud-connected rock knowledge sensors, and data analytics to improve the process of identifying and extracting mineral resources for drilling contractors and resource companies globally. So let's talk about IMDEX and the financial year 22 results. And the main reason I'm talking about IMDEX in this particular video, first reason is I don't know much about this company, so I thought I'll do a little bit of research. And the other reason is because the revenue have been growing quite consistently over the past 7 years. So I thought let's have a look to see if IMDEX is a potential long-term buy. Currently, I am loving doing this video series, which is the financial year 22 results series. And unfortunately, we are in October as well, in the middle of October, just past the middle of October, which means we're also in Appendix 4C and 5B season. So I'm looking at a lot of Appendix 4Cs and 5Bs. We had about 5 that dropped today on October 17. I'm recording this video 15 minutes before the end of trading on this Monday. Anyway, the next 5 companies I'll be featuring in this particular series include Seek, Bapcor, GUD Holdings. I'll do that video either tomorrow or the next day. The reason I'm thinking of delaying that the release of that video by one day is simply because a few companies did release trading updates today on the 17th, and fairly negative trading updates, including Costa Group and Adbredi ABC. I know that company as Adelaide Brighton. Their share price last time I looked was down 22%. So the other 2 companies I'll be featuring in this video series include Valuation and BHP. In fact, I'll be discussing and talking about BHP briefly during the rest of this video. Now, when I first started investigating, researching IMDEX, the first thing I wanted to know about this company is the quality. Is this a high quality company or is this a low quality company? If it's a high quality company, it all comes back to value and whether I think there is good value right now. And if I think right now there's very good value for this company, I would not be hesitant taking a position in this company, even though we are in a bear market. And right now the NASDAQ and American markets are down almost at multi-year lows. The ASX is doing a little bit better, but we are more finance and commodity focused, while the American markets, particularly NASDAQ, is more tech focused, and tech companies are suffering right now. But if I realized and thought IMDEX was a low quality company, it's all about the share price trend and sentiment behind the company. So value is much less important if this is a low quality company. Hopefully that will make sense during the rest of this video if you are a little bit confused. So right now I would consider IMDEX because it is a mining tech company, and I closely associate mining tech companies. And in fact, IMDEX might be the only mining tech company that I can name you right now, but I would associate mining tech companies fairly closely with mining services and mining companies. and definitely mining services and mining companies are low quality. So I would, at this point in time, probably identify IMDEX as a low quality company. Now, for those who love this company, you could think I am absolutely mistaken. So this is just my personal opinion right now on IMDEX. That opinion can change if I get evidence that this is more like a high quality company. I'd love to see that sort of evidence. So if you have that evidence, leave it in the comment section of this video. Now, one of the reasons, further reasons that I would consider IMDEX to be a low quality company is just the long-term chart. And this looks like the monthly chart. So I set this video up about a week ago. So this looks like the monthly chart because it goes back 20 years. So 20 years of IMDEX right here. And the main thing you see when you look at the long-term monthly chart for IMDEX is the massive peaks and troughs you get with this company. Fairly similar than what you would find in commodity-driven cyclical companies. You will see those type of mining companies, share price and valuation being highly dependent on the underlying commodity price. And most commodities, if not every single commodity, is a cyclical thing. The share prices or the prices of commodities go up and down based off supply and demand. So just here with IMDEX, you can see the share price of this company rose to highs or rose to peaks during 2007, also in 2012, and that was at the end of the last mining boom. And then it fell from a high of about $3.25 all the way to a low less than 25 cents. And that low was reached in 2016. And I do know that 2016 was a low in iron ore prices. So straight away, I was thinking that IMDEX is heavily invested or heavily involved within the iron ore industry. And in fact, the next few slides, I'll be comparing IMDEX share price to BHP, Rio, and Fortescue. I also compared IMDEX to Newcrest Mining, which is a gold company, and there was no correlation. But you definitely see a correlation between IMDEX share price and performance, valuation, and those three major iron ore producers. And you can just see the share price of IMDEX since 2016 has risen quite considerably from less than 25 cents to a high of $3.12. So definitely, once the share price of this company gets above about $3, you do have to get a little bit wary, because whenever the share price of this company gets to that level, you usually see the share price fall back. And that's exactly what we've seen since the start of 2022. Now, what I've done in this particular slide is just compare the share price of IMDEX to BHP and Rio. I haven't included Fortescue in this particular slide, but I have included the next slide. The reason I didn't include Fortescue in this particular slide was because Fortescue significantly has outperformed these other three companies in the past 10 years. So this is looking the last 10 years. So they all start at 0%. So we just want to see the rise or falls in the share prices of these companies over the past 10 years. And you can see the drops in the share price of these three companies from 2012 all the way through to 2016. And the other thing you'll notice is that IMDEX suffered significantly, or the share price suffered significantly more than the share prices of BHP and Rio. And that sort of makes sense, because during 2015 and 16, there was a lot of mining services companies that suffered significantly because of lack of investment in regards to mining services and mining techs by large mining companies like BHP and Rio. In fact, the lack of investment and lack of capital expenditure has actually continued since then. But you also saw a rally in all these share prices of all these three companies since the bottom of 2016. And if we do look at the comparison of the performance of these three companies, the best performing company has been Rio, and just pulling up the rear there, slightly behind Rio is BHP, but pulling up the rear by a significant amount is actually IMDEX. In fact, IMDEX share price has only risen about 20% over the past 10 years. BHP has risen about 60%, while Rio has risen about 75%. So those two mining companies, large Australian mining companies, have performed better than this mining tech over the past 10 years. But if you change your time horizons, you get a little bit of a different result. So let's have a look at the performance of these three companies and Fortescue since the bottom of the iron ore boom bust cycle back in 2016. In actual fact, what I've done in this particular slide is I've actually just Not included the performance of Rio because the performance of Rio and BHP were almost identical, slight variations here. But I've also included Fortescue. So what I've done here is taken the start of the time frame, this particular time frame, from the bottom of that particular cycle. So you can definitely see that we're in the upswing of a cycle. A mining tech company like IMDEX does perform significantly better than those two large mining companies that are BHP and Rio Tinto. In fact, even though BHP and Rio Tinto's share prices have risen by between about 150 and 200%, Mdegs share price has risen by about 840% since 2016. The other company I've included here is Fortescue. And the performance of Fortescue and Mdegs have been fairly similar over the past 7 years. So Fortescue has risen around about 800% over the past 7 years. So the main thing you want to see here and take away from these two slides is during the bull market in iron ore, or maybe just commodities, Index probably will outperform the larger miners. But when you are in the downward slide, in the iron ore cycle, you probably want to stick with BHP and Rio, the larger miners, because seems like the mining tech and mining services companies will suffer significantly more than those large mining companies. And that actually does make sense when you actually do think about it a little bit. Now onto the financial year 22 results for Mdegs. And before we have a look at revenue, profit, and operating cash flow, let's have a look at the valuation of this company. Now, the share price of $1.99 was a few trading days ago. Now, the Australian markets are down. Last time I looked, about 1.5%, and Mdegs share price was down about 2%, down about $1.97. But at a share price of $1.99, Mdegs has a market cap or a valuation of about $792 million. Now let's have a look at the financial year 22 performance for this company. Revenue of 341.8 million, profit 44.7. So straight away, the first thing I notice here when I looked at Mdegs is a higher margin than I probably would expect in mining services company. So there is possibility that Mdegs does have a higher quality attached to it than mining services company. And that also makes sense because a lot of mining services companies have zero moat, zero competitive advantage. And there is a possibility that Mdegs has a competitive advantage. So I could be wrong in saying that Mdegs is a low quality company. Maybe there's different states or different stages of, or different tiers, probably is a better word, of low quality and high quality companies, and Mdegs might be in the higher tiered of the low quality companies. Anyway, so revenue 341.8, profit 44.7, operating cash flow 48.1, earnings per share 10.8 cents. And usually when I do this particular slide, the first thing I look at or compare is the earnings per share to the share price. And so I get a fairly quick gauge of the P ratio, current valuation. And right now, the current P ratio of Mdegs is just below 20. So straight away, I'll probably say, and this is just a very rough guide, I would not say that Mdegs is, say, good value right now. But because I would consider Mdegs to be a low quality company, the valuation or the current valuation is not what I'm looking at. I'm actually looking at the share price and the current sentiment. We'll have a look at the daily chart later in the video. So that is actually more important than the valuation metrics for this company. But because I'm thinking maybe this is a higher quality, low quality company, valuation is also important. So I shouldn't ignore valuation. So I will look at the valuation metrics later in this video, but straight away, P ratio of this company is just less than 20 at a share price of $1.99. Now let's have a look at some of the long-term history, so 10-year history of total revenue and also gross margins. So I was interested in gross margins simply because I thought maybe because it's a mining tech company and maybe they do have a little bit of a moat or competitive advantage over mining services company, that the gross margins and the net margins, operating margins are a little bit higher for this company than mining services company. And so the first thing you'll notice here, but take a quick look, is how revenue didn't go anywhere. In fact, fell between 2011 and 2016. And that 2016 was the bottom of the iron ore cycle at this point in time. And from 2016, the revenue for this company has grown considerably. In fact, it's grown from 142 million to 341 million. And the same stage or the same time period, gross margins have also increased from 61% to 69%. So you've got the increasing revenue and also the increasing gross margins, and more than likely increasing net margins and operating margins. So that's one of the reasons why this company has, and the share price of this company has performed quite well over the past 6 or 7 years. The other thing I've included here is just the shares on issue. And it does look like this company did make a significant acquisition either in 2016 or 2017, because in those years, we did see the shares on issue increase considerably from 243 million to 344 million. Now, that's important because it does look like at the bottom of the cycle, this company made a significant acquisition. And to be honest with you, you can look at this two ways. They made a really good acquisition at the bottom of the cycle, and you would prefer companies to make acquisitions at the bottom of the cycle because you are getting good value. But the other way to look at this, at that point in time, the valuation of Index was fairly low, so they did have to pay a fairly significant price for that acquisition. But over the last 5 years, the shares on issue have gone almost sideways, but you'd probably argue have slightly crept up over that time period. Then if you look or calculate the growth rate in revenue over the last 5 years has actually gone down. And when I'm calculating the revenue growth, it's actually revenue per share. So even though revenue has grown from 205 or 270 million to 342 million, shares on issue have increased. So if you do calculate the revenue per share growth, and that's the best way to calculate this because your portion of revenue, if you are a shareholder of this company, has actually gone down 2.6% per year over the past 10 years. But over the last 5 years, it has grown at 8.5%, and over the last 3 years, 10.1%. So that's after, or just after, that major acquisition this company made. So this company is growing over the past 5 years, just based off revenue per share. One of the other things I like to look at for mining services company, mining companies, and quite a few other capital-intensive companies is just look at the capital expenditure this company has made over the past 10 years. So what I've included here is cash flow from operations and also capital expenditure. Now, it doesn't seem like IMDEX is a capital-intensive or highly capital-intensive business because the most they spent on capital expenditure was in the previous financial year, 33 million. And there have been some years in the past, particularly when the valuation of this company was really low back in 2016, 2017, where this company did not spend much money on capital expenditure. Only $3 million in 2016 and $6 million in 2017. And when this company does perform a little bit better, that's when they start to spend a little bit more money on capital expenditure. But primarily, this company is operating cash flow positive and also free cash flow positive as well, because the way you calculate free cash flow is take the capital expenditure and minus that from the operating cash flow. And over the last 3 years, operating cash flow has remained steady between about 52 million and 57 million. And so this company is free cash flow positive by about, we'll say about 30 to 20 million dollars over that 3 year time frame. Now let's have a look at a few parts of the financial statements for Mdegs, focusing first on the cash flow statement, and then we'll look at note 3.1 in the next slide, which is the reconciliation of the cash flow to profit. Main things I'm looking for here is growth in receipts, operating cash flow, and we already know this company is operating cash flow, but the operating cash flow actually has slightly fallen from last year from 56.9 million to 55.5 million. I want to understand that, and the reconciliation or note 3.1 will lead us down the path where we can understand why the operating cash flow has fallen by $1 million over the past year, yet receipts from customers has grown from 272 to 351 million. The other thing to notice here is cash flows from investing activities was 52.8 million. So this company, it did actually bleed cash in the past year. In fact, cash on hand fell from 58.4 million to 36.4 million. So even though they did spend a lot of money in investing activities, they also paid $13 million in dividends and $4 million in cash paid due to settlement of performance rights and $7.4 million in the repayment of lease liabilities. So this company did bleed a fair bit of cash in the past year, but that is not a red flag at this point in time. I would consider this a red flag if I see changes in working capital not that big and wouldn't explain why the cash flow from operations has fallen in the past year. So let's have a look at note 3.1, the reconciliation of cash flow to profit. So the main thing I look for in the reconciliation of cash flow to profit is depreciation amortization, which is $36 million for this company. You wouldn't expect much change in that year on year. Sometimes you see almost zero change. There was a slight uptick in depreciation amortization for Mdegs in the past year, increasing from 30.8 million to 36.2 million. So you could slightly explain the lack of increase in operating cash flow through depreciation amortization, but I'm not satisfied with that. I want to see a significant change in working capital, which is found in the second half of this, which is changes in assets and liabilities during the financial year. So what we're looking at here is increases or decreases in receivables, inventories, and payables. Those are the three main things I'm looking for here. And there's been a significant increase in receivables and inventories to the tune of about 37 million. An increase in receivables and inventories is a cash outflow. And there's also been a slight decrease in current payables, and that is also a cash outflow. Well, actually, that's a cash inflow. That could be completely. I'm in between night shifts right now, but definitely decrease or an increase in receivables and inventories is a cash outflow, and that could explain why the operating cash flow has fallen from last year. Now into some valuation metrics for Mdegs. I've also calculated the reverse DCF, which is just the growth rate of the company's earnings per share to justify the current valuation of the company. So when I look at the valuation metrics, P ratio 17.7, price to sales ratio 2.31, which is probably significantly higher than a lot of mining services company. So again, I don't think this is the classical mining services company that has no moat, no competitive advantage. I think Index might have a bit of a competitive advantage, a bit of a moat here. Maybe they even have a brand if Index products are highly thought of within the mining industry, and the price of operating cash flow is 16.5. So in isolation, P ratio 17.7, price of operating cash flow 16.5 don't seem considerably high. So I wouldn't say this company would be overvalued or undervalued based off those two particular valuation metrics. But because I would consider Index to be a low quality company, even though it might be on the high side of a low quality company, I'm not too concerned with the valuation. It's all about the trend in the share price and the sentiment behind the company right now. And I'll have a look at the short-term daily chart in the next slide. But I also did a reverse DCF. So I just want to know what sort of growth rate this company needed to justify the current valuation. I was a little bit surprised that the growth rate needed was 24% per year. It seemed a little bit high to my liking, but that is high. So just based off that reverse DCF, I would say that the current valuation of this company is a little bit too high for my liking if I was just looking at the valuation metrics. Now onto the daily chart for Mdegs, looking over the past year or so. So this goes back to the end of September, so about 13 months of history here. Share price did reach a high of $3.25 in January of this year, and a lot of companies' highs in the share price was around the end of December, start of January, I've noticed, but the share price of Mdegs has moved into a downtrend. We have seen a bit of a rally in the share price of this company from the low we saw in July. Share price has rallied from about $1.65 to a current share price at around about $1.97. So at this point in time, no positive sentiment in Index share price. Share price is in a downtrend. So if I was just focused on the fact that this was a low quality company and I was just solely focused on the trend in the share price and the sentiment at this point in time, I would not be looking at taking a position in Mdegs. So that is just the way I look at this company, using my own investing style and principles. So you could be completely different, particularly if you might think this company is a high quality company and you might think this company is good value at this point in time. So it's all up to the individual investor. So these are just my thoughts. So don't take these thoughts and then apply any action to it. Don't go out there and buy Mdegs just because of something you heard in this particular video. So I'm going on a little bit of a rant right now, and that's probably because I am in between two night shifts and I might be a little bit tired. That's all I have for Mdegs. So looking at financial year 22 results, this mining tech company, I've changed my thoughts, slightly changed my thoughts on this company. So I was sort of at the start of this research process, I was thinking this was a low quality company, put it alongside those mining services, those mining companies. But as I thought about it, as I've recorded this video, I'm thinking it's a mining tech company. And there could be a little bit of a competitive advantage, a little bit of a moat for this company, particularly if their products they have are unique. So put me alongside the group that thinks that IMDEX is a higher quality sort of mining services company. It might be put into its own sort of sector as well. Can't think at this point in time any other mining tech companies on the ASX. There are probably some, but I can't think of any right now. So if you do have any thoughts, any questions, if you think I'm totally wrong on anything I said in this video, please leave your thoughts in the comment section of this video. I've said it time and time again. The way I learn is taking people's opinions that are different than mine and then looking at those opinions, thinking about those opinions, and then coming to the realization that I might be wrong. That's how we learn as investors. In fact, that's how we learn as human beings. So please leave any thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.